2025. We are only a quarter of the way in, but what a year it's already been. No thanks to this guy. We have devastation in the stock market, recessionary fears, and geopolitical tensions, the buffet of uncertainties. Now, the golden question is, what is all this going to do to the Singapore real estate market? And I apologize for the delay in putting out this video. This is going to be our 5th year doing it, but for the last 4 years, we've always done it in December before the start of the year. But hey, everything happens for a reason, right? Because with this tariffs, everything is gonna change, right? Yes and no. I'm going to explain later on in this video. So before we dive into our predictions for 2025, one of the things that we've always done is to look back at the predictions we made for the previous year to see what we got right or what we might have gotten wrong. And especially for those that we've gotten wrong, why was it that we got it wrong? Did we miss out certain data points? Did we misinterpret certain measures that were implemented in the market? Do we have to change our mindset, frameworks, our models, or our theses? Right, all of this in hopes that in the long run we get better at it and become more accurate, and also to benefit the viewers, hopefully taking you behind the scenes on our thought processes and how we come up with predictions like that. You can learn a thing or two to help you with your own decisions and your own predictions. Let's get started with my predictions on the HDB market in 2024. I predicted two things. First, that prices will remain stable or move up slightly, and also that transactions will go up. So as we can see over here, year on year, right, between 2022 to 2023, the increment was 6.8%, right, and between 2023 to 2024, the increment was 7.6%. So it's actually higher in 2024, not so stable, not so much stable or move upwards like I predicted. So I'll be critical, right? I didn't get that all too correct. Okay, however, I got my prediction on the volumes part right. From 2022 to 2023, actually volumes did come off by minus 4.2%. But between 2023 to 2024, volumes came up again, up to 8.4%. So as you can see, it's almost a 12% swing, right? You can also see this over here. Again, if you guys like some of these charts, data points, feel free to drop us a text. We'll be happy to share that with you. Okay, why did I get it wrong? What did I get wrong about the price prediction? So number one, there was the cooling measures involved, right? I thought would kind of pull some demand away from the market. But the key thing over here is that I felt that with the prime and plus flats coming in, right? If you watch my video, or you could click on the link to check out why I was explaining, right, the reasons behind those predictions. Okay, so in summary, right, the prime and plus, I felt the prime and plus flats were splitting out the demand. Okay, those that want to, in a faster period of time, they will buy the 5 years MOP flats, right? Prime and plus ones, they were those that are happy to stay a bit longer but want a more prime location, they will then choose all those, right? But with the prime and plus, because of the 10-year MOP, right, they will force a lot of the demand into the resale market, hence pushing or continuing to keep those centralized HDBs that's not affected by the prime and plus rulings, keep those prices high. Okay, but the government has also been pumping out a lot of supply into the BTO market for the standard flats. Okay, so and I felt because the standard flats also have a 5-year MOP, resale flats also have 5-year MOP, that it will divert a lot of demand away from our resale flats in the outskirts areas, those that's not affected by the prime or plus rules. And the fact is that those prices have tapered off or come off slightly. If take for example areas like Tampines, areas like Punggol, unless of course those flats have great attributes. If not, we have already seen prices stagnate or come off a little bit. Okay, but of course at the end of the day, this data is presented holistically based on the entire market and based on what we have seen, right? The high price ones have single-handedly pushed prices up and continue to keep prices up. Okay, now on volumes, right, the reason why I predicted volumes to continue coming going up despite a drop in MOP is because of the reduction in interest rates. The reduction in interest rates have allowed for a lot more people to come into the market, both in terms of first-timers coming to the market and also with regards to upgraders being more able to move into the private market, because number one, they can take a lot more loan stress as interest rates have come off in 2024 from perhaps 4.6 to 4.8% all the way down to 4% already, right? So that's allowed for a lot more people to take loan. Those that couldn't afford to buy the HDB flats before that were now able to buy, and also for those upgraders, right? A lot of them were then able to take more loan and make that jump up to private. So on that part, we have got the predictions spot on. Now let's review my predictions on the private market. And for my very first prediction, I predicted that there will be a greater undersupply in the resale market. Now there's no real data point to illustrate this prediction, so the best way for me to show it to you is to look at some case studies. So I've picked out 3 developments totaling about 4,500 units. The first of which is Park Esta. I filtered down to 3 bidders above 1,000 square feet, so our upgrader favorites, right? 3 premiums that come, there are 3 bidders that come with a utility room and a WC. Okay, so in Park Esta, close to 1,400 units, just 5 3-bedroom premiums for sale, and these are the kind of prices that people are asking for. So Park Esta is beside Eunos MRT. Next up, we have Jadescape over at Marymount MRT. It's close to 1,200 units, out of which we only have 2 of such 3-bedroom premiums for sale, and these are the kind of asking prices. Then now moving on to Park Clementi's over at Clementi. For Park Clementi's is 1,400 odd units, out of which we have 4 of such 3-bedroom premiums for sale, and these are the kind of asking prices and quantums. The reason I'm showing you these case studies is to illustrate to you how hard is it for upgraders to find 3-bedroom premium, or essentially find any sort of units in such developments. I'm breaking down the numbers. Out of 4,500 units, just 11 3-bedroom premiums for sale. That's like 0.2%. If you are looking at the percentage out of all the 3 bidders, is at just 1% effective supply in the market. Now, why is this happening? I've illustrated this in my recent popular video. I'm putting that link in somewhere in this video or down in the description, right? I've noticed and explained these 2 key problems associated with the resale market at this point in time. So now this is also another reason why we have seen the recent launches, or the launches in the last couple of months of 2024 being taken up at such high percentages like 80-90%, is because people just can't seem to find anything to buy in the resale market. And next up, probably the easiest prediction of them all, a continued increment in the private property price index. So we have ended the year of 2024 with a 4.8% increase in the private property price index. But what's more interesting about this data point is that it's the lowest since COVID, lowest since 2020, where it was at 1.6%. Another interesting point is that we had the last quarter to thank, right? The last quarter with the launches of EOK, Chuan Park, Nava Grove, right? Bringing in a 2.3% increment in the private property price index, without which we would have actually ended the year with just slightly over a 2% increase, right? We even had a dip over here in that 3rd quarter. Now, why is that so? I'm going to explain that later on in the video. And I've also predicted a pickup in transaction volumes for the private market, and you have indeed done so to the tune of 15%, right? Up from a total of 19,000 in 2023 to 21,000 in 2024. Now, what's interesting is that I thought that this increase in volume will primarily be driven by new developments, but what's interesting is over here, if you take a look on a year-to-year basis, actually the new development sales were not too different between 2023 and 2024, despite the crazy amount of launches over in Q4. I guess it's kind of mitigated by the lack of launches earlier on in 2024, hence bringing the volume of transactions very, very similar. If you look at sub-sale, the numbers are also very, very similar. So now what's the main contributor of this increase in transactions? It's resale, surprisingly. Okay, so resale came up by 24%. So it's the one that has primarily driven this increase in transaction volumes. Now, how do we explain it and the reason why that's happening? If you can see now that I've broken down into quarters, again, an interesting thing is over, as you can see, is over here, right? So in 2023, you see the transaction volumes for resale being quite subdued, right? So the 2023 volumes were actually primarily driven by the new developments, yeah? And then over in Q1, even in Q1 of 2024, the transaction volumes for resale were still quite subdued, right? Then we suddenly see this spike up over in Q2. The only way to explain it is a reduction in interest rates, right? As stress test interest rates came down, people can loan more money, right? This is what I've explained quite a number of times, right? As people's loan and affordability comes up, they are then more motivated to pursue that upgrade, right? Previously, the loans are low, there's not much resale volume, prices not really moving, they are not so incentivized to move. Now, they feel that their loan can come up, their affordability can come up, so while yes, there's still an undersupply in the resale market, asking prices are high, but now their affordability has come up, they can then bridge that gap better. This is where things start to move, right? This is the whole case study or the whole example about how interest rate drives movements in the market. And for my next two predictions about the CCR and the RCR, I'm just going to utilize the URA's press release for the fourth quarter of 2024, right? So I predicted that the CCR's property price index will come up. So as you can see over here, it's come up, it's a 4.5% increase from 2023, with 2023 being only a 1.9% increase from the previous year. So we've seen quite a good jump, right? The reason that I gave over there was the TOP of Copa, Leiden Greens, right? So a lot of the newer developments hitting its TOP, allowing for more transactions to run and also allowing for PSS to come up because they were built in the newer style, right? Slightly smaller, your 900, 1000 square feet 3-bedders, and also in a lot more affordable quantums for the market, right? And so that has kind of driven this PPI to come up, right? My second prediction was that RCR will outperform, right? So as you can see over here, the RCR coming up 5.8% year on year compared to the CCR being 4.5% and the OCR being 3.7%. So spot on, right? It's the segment that has outperformed the rest, okay? The reason why I gave as well was because there's actually a lot more supply coming into the RCR, driving a lot of demand into the RCR. That's the first thing. And second is because, number one, the CCR was coming off a really low base, right? So it's quite not easy for the CCR to kind of outperform the RCR. That one is probably the more easy part to see about that, right? The harder part to predict was the RCR's outperformance of the OCR, which I stated on in my video last year, right? The CCR, I believe, will continue to outperform, and outperform compared to who? Compared to the OCR and the CCR, right? Because of the sheer number of TOP units still in the RCR, and because of the fact that there's still going to be, in terms of the next couple of years, still going to be quite a fair number of developments to be completed into the RCR, right? The OCR, because of the launches and whatnot and the price gap being quite near already and having seen a huge spike up in prices, I believe RCR will perform better in that sense as opposed to the OCR. It was because the OCR's price increment year on year from 2022 to 2023 was way too high, 13.7%. So it has to slow down somehow, right? Hence it has slowed down to 3.7%. Now moving on to my predictions about the landed market, I predicted that the landed price increments will slow down. And again, we can refer to URA's Q4 press release for this, right? Over here is stated, right? Prices of landed properties decreased by 0.4% in the fourth quarter of 2024 compared to a 3.4% decrease in the previous quarter, right? Prices of non-landed properties increased by 3% in the fourth quarter, mainly driven by sales transactions at selected newly launched projects. For the whole of 2024, prices of landed properties rose by just 0.9%, while non-landed rose by 4.7%, 4.8%, right? Moderating from a respective increase of 8% and 6.6%, right? So you're looking at 8%, right? 0.9% versus an 8% increase. 0.9% in 2024 and 8% in 2023. Right? The reason behind this, as I've explained, is that I feel landed prices have spiked up quite a lot, right, over in 2021, 2022, 2023. Hence, again, it has to take a breather, and it has done so in 2024. Now, that said, right, it's still very, very hard to find low quantum landed properties in the market, right? This one I'll talk about it later on in the video. Next up, for rentals, I predicted that rentals will stabilize, and again, right, I'm going to quote the MAS Financial Stability Review for 2024 for this, right? The private rental market has moderated from its peak, right? To summarize over here, it has fallen from its peak in Q3 2023 by a cumulative of 4% across all market segments. They have explained that construction has caught up, right? So the supply now can make the demand. As a matter of fact, I did predict that demand will fall off because quite a lot of the people renting during that period were actually waiting for their houses to be completed, be it BTO, be it new condos, right? So now those that have been completed, the demand for those segments have come off, and also even some of the expat demand have also come off. So this two-pronged drop in demand has caused rental prices to stabilize in certain areas and come off in other areas. So for my very last prediction, I predicted that there will be sharp price movements should stress test interest rates come down, and they did in fact come down, hence giving us headlines like that. So now we are seeing OCR prices hitting 2,600, PSF, RCR hitting 2,009, even 3,000 PSF. But the scary thing is not just the price, it's the fact that if you don't get a queue number, you don't even have a chance to buy. And a lot of people have kind of explained it because of pent-up demand, that kind of thing. But the answer is no. The answer is the fact that everybody has an increased budget thanks to the reduction in stress test interest rates. And by the way, it's still a mystery to me how, despite all these prices and the sheer number of units being sold in the last quarter, that the PPI has only gone up by 2.3%. And so we're going to start off our 2025 predictions first with the HDB market. And I must admit, I haven't had the best track record for HDB predictions. So if you've been following us, you know I've kind of got it wrong ever since COVID. And the reason why I've explained it in those prediction videos, but maybe I can give a very quick summary again, right? So prices came up during COVID primarily due to delays in BTO construction, and people, right, it went from a 2.5, 3 year wait to like a 3-4 years wait. People didn't want to wait so much, and then they decided to all rush into the resale market, right, hence pushing prices up. So I predicted, right after COVID, because the government will pump up and pump in a lot of supply back into the BTO market to try and draw some of this demand out from resale, hence bringing prices back down. And if you really analyze the market, actually HDB prices all the way from 2013 up to thereabouts COVID time, they were moving sideways or actually slightly downwards, and I expected price to go back to those kind of performance after COVID once BTO construction catches up, BTO supply catches up, right? But what I didn't predict was the implementation of the plus and the prime rules. Okay, so I'm not going to explain 100% of all the plus and the prime rules, right? Well, we have videos for that. But what the plus and the prime, the introduction of plus and prime HDB flats has done to the market was to actually push demand back into the resale market, primarily for people that wants to continue living in the central areas but do not wish to be subjected to all the plus and the prime rules, primarily the 10-year MOP. So what that has done was to keep prices in those central areas high, hence seeing newspaper articles where record number of $1 million flats, right? So what the government has done was essentially to split the demand. What I previously thought was, right, with the new BTOs coming in, with the BTO supply coming in, if all BTOs were subject to the 5-year MOP, I do still feel that prices would have come off, right? But with this new 10-year MOP, people not wanting to buy into the 10-year MOP or choosing to buy resale, hence keeping overall prices still high. So where does that leave us today? Let's take a look at some data points. So the couple of data points that I utilized to form my analysis, it's number one, resale transactions, demand side factors, right? Which are resale transactions, demand for resale properties. I'm also looking at BTO application rates, demand side factors for new flats. So demand for both new and resale, right? I'm also talking about supply. Similarly, supply of new which are BTO launches, and supply of resale HDB MOP numbers. So we're taking a look at these 4 data points, of course, comparing them to the resale price index, finding their correlation to resale prices. Okay, so let me first start off with the demand side of things, right? As you can see, in terms of resale, they average about, as you can see, right, between 20,000 to 30,000, 20 to 30,000, probably average into about 25,000 per year, more or less, most years about the same. And BTO application rates, so I'm going to pay a little bit more attention to this, right? As you can see, in the year where prices really spiked, which is 2021, right, where they really spiked in terms of resale transactions, right out of COVID, BTO application rates were also very high. We are looking at 8 times oversubscribed for mature estates and 5 times oversubscribed for non-mature estates. This has all caused prices to spike up significantly. Okay, but we have actually seen BTO application rates come off, the oversubscription rate come off. Mature estates come down from 8 to 5% oversubscribed, and non-mature estates from 5 to 3 times oversubscribed. Right, I primarily put this down to the fact that the government has pumped up quite a fair bit of BTO supply. Okay, so with this number coming off, and if they continue to come off, I do expect this to lead to some HDB prices tapering off, or at least moving sideways. Right, it's a very clear indication, right? Because everybody would rather buy the brand new ones. But this in itself, there's a little bit of intricacies, a little bit of nuance. Okay, so if you look at this, right, you can assume that demand is coming down. But then again, why? Right? With subscription rates coming down, resale transactions and prices still coming up. Let me explain. In my opinion, why is this happening, right? It's because of the prime and plus rules. Okay, so most mature estates, or the new supply into mature estates, are primarily restricted to either the prime or the plus rules. Okay, so not everybody would want to restrict themselves to those. And then what's the alternative is to come down and buy resale, right? So your mature estates, right, take up a lot of all these resale transactions, right? The new ones, yes, people still go for it, but those that don't want will have to buy in the resale market, hence pushing resale transactions in those areas, right? This is the overall resale transactions, but I do think and I do feel a lot of all this are being brought so by the more centrally located HDB flats, right? Which is why you see prices moving up still quite aggressively. Okay, so now the reason why I feel prices for HDBs will continue to go up despite you see demand kind of tapering off, oversubscription rates tapering off, that kind of thing, is because of a low supply. Okay, so if you look at the BTO numbers, right, it has also come off, right, from 2021, right, and even with the new supply, like I've explained, right, and I repeat it again, there's still quite a number of prime and plus ones, hence shifting a lot of demand either into resale, those that want 5-year MOP, to resale or to standard. Yeah, and this one is the BTO launches will continue to move sideways or come off actually, right? And the main thing over here is MOP supply still being very low, right? With its bottoming in 2025, because right, 5 years back was COVID, right? Not a lot of people took keys during 2020. So we are seeing a bottoming of supply in terms of MOP in 2025. So with this low supply, I feel prices will still be held consistent or maybe even upwards. I'm putting in the number at likely about 6%. Right, but that being said, right, between 6 to 7%, not too different from the last 1 to 2 years. Okay, but the main thing over here is that yes, price percentages, right, price increment is still going to be there, but this may not. How does this actually impact you? You then have to come down into the intricacies or come down into the specifics of your area, because for ourselves, we do HDB deals as well, just in case you don't know. I think a lot of people, because we do a lot of condo reviews and whatnot, a lot of people don't think we do HDBs, but we do also do HDBs, yeah? That's kind of like our bread and butter HDB upgraders. So that being said, right, a lot of the word on the ground, if you speak to agents, right, the HDB MOP, the flats are those in areas that's a bit further out. Case in point, Tampines, your Tampines North area with a lot of supply, maybe your Bukit Panjang area, also your Punggol area, Sumang area, Sengkang area, right? We are seeing prices tapering off, units taking a lot longer to sell, GOV numbers coming off already for those areas, right? The thing about HDB data points is when they release, they release this price index on an overall island-wide basis. Okay, so we have the $1 million HDB flats holding up the numbers that case, right? So the mistake that you have to avoid is to utilize that to make your decision. Okay, so you got to then come down and monitor the prices around your area. Of course, if you need help with that, feel free to reach out to us. We could help you out as well, right? But please be very, very aware. Also, if you have an intention to upgrade, if you look at these numbers with MOP numbers coming down significantly, this may be the best time to do so before MOP numbers start spiking up aggressively from 2026 to 2027. So what I'm thinking is that this may be one of the best times for HDB upgraders to look to upgrade. You cash out on a slightly higher price point. Later on, I'll talk about my private predictions, and then you can have a better picture of what I'm trying to say. In terms of volume of transactions, I do expect it to be about the same as the last 1 to 2 years, maybe even drop off a little bit because of the lower number of MOPs. So now moving on to my predictions about the private market in 2025. And no doubts about it, 2025 is going to be a slower year. But what if I told you it's not necessarily just because of Trump and his tariffs? So how did I come to that conclusion? What I've done was to put all the kind of data points that I feel has a strong impact on property prices. Data points such as MOP supply, which translates into private demand. On average, a good 20 to 30% of people, when they hit their MOP, they will choose to upgrade to private. I also have TOP supply. I have developer unsold inventory, and also I've put in property price index as well as resale volume, right? So having put all of this together, I've run it through my software, and we found that the highest correlation to property prices is actually coming from HDB MOP supply, right? And if you look at HDB MOP supply, which is shown in blue over here, it has actually been coming off from a peak in 2022, right? It came down in 2023 to about 15,000, and then coming down in 2024 to 13,000, and bottoming out this year to 7,400 approximately, right? And this is primarily due to the fact that 5 years ago, we are smack in the middle of our COVID-19 pandemic, so not many of them were able to collect their keys, okay? And based on historical data, right, the last couple of cycles where HDB MOPs were at a lower point, right, it also correlated to slow private property price increments, right? Not necessarily price reductions, but slower property price increments, okay? So now, based on this, with the slow MOP supply, I think regardless of Trump and tariffs, I believe we will have had a slower year regardless. So when I say that the market will slow down, does it mean that prices will come off? Well, on a broad basis, the answer is no. And perhaps I could share with you some charts to illustrate the reason why I say that, okay? So what I've done was to put the data for the annual household balance sheet into a graph, right, to make it easier to understand. So for those of you who have been following us, the last few times we've actually been showing it in the Excel sheet, which is kind of hard to understand, right? So what I've done was to put it into AI to create a graph like that, okay? So again, right, if you want to have a copy of this, drop us a text, happy to share it with you. Yep. So what I've done was to put in, right, the amount of currency and deposits, basically liquid cash, right, that the Singapore household is sitting on, the CPF holdings, okay, and also the mortgage loans, right? So essentially, this is the cash versus the liabilities, how you look at the cash and the liabilities, right, for the Singapore household, okay? So even if I take off the CPF holdings, what we see over here is this, okay, that the amount of liquid cash that the Singapore household is currently holding stands at about $658 billion, and the amount of mortgage loans that altogether that the Singapore household is currently holding is $277 billion. Now what does that mean? That the Singapore household balance sheet is in a net cash position, and should anything happen, we take all the cash, we pay off all the mortgages, and we're still going to be left with a good, based on the numbers over here, at least almost $400 billion. Not to forget, you could also use your CPF to help subsidize some of the mortgage loans, right? A good chunk of people actually service their house using CPF. So this is liquid CPF. I don't believe this includes CPF that is utilized in the house, right? So there's still going to be a large chunk of it that's available. Yeah, of course, there's going to be, say, special account and MediSave and whatnot, right? But even if you go and strip out away, because total total CPF holding is about $600 billion, right? Even if you use a small percentage of it, 200, I believe 200 over billion sitting in OA, that's more or less sufficient to already cover for a good chunk of the mortgage loans that a Singapore household is currently sitting on, okay? So now, what does this all mean, right? And what I've also done is also to put in some of the factors that would impact real estate prices. Factors such as the Lehman Brothers crisis, also the implementation of the cooling measures, right, ABSD, the trade war, the first trade war, okay, COVID-19 pandemic, and also the Ukraine war, right? As you can see over here, as with all the external impacts and all the ABSD rules over here, the Singapore cash holdings have continued to come up. And as you see, the more the cash holdings comes up as a function of mortgage loans, right? You can see over here, right? The wider this gap is, the lower the correlation of the Singapore property prices have as a function of external factors. I actually also have that over here, as if we can turn all of this off, okay? And you can see, right? Rain or shine, essentially, right? The real estate prices, private, have continued to go up. Subsequently, similar to public, it has also continued to come up, right? All these external impacts have not really impacted the real estate market by much, right? Previously, if you see this, you may not understand why, which is why I put it together, right? It's primarily because Singaporeans can afford to pay their mortgages and they are not taking in extra loans to fund their house, right? Of course, it may not apply to everybody, but on a broad basis, on an overall basis, this cash over liabilities ratio have continued to climb up, reducing the correlation between Singapore real estate prices and the external market. And that is also why, if I refer to this other chart, which I'm going to put on the screen, right, ever since, and this is put together by the Monetary Authority of Singapore, comparing the fluctuations of the Singapore real estate prices quarter on quarter, okay, and as you can see, that fluctuation have come down significantly ever since the imposition of the property cooling measures, removing speculative demand from the Singapore property market. So with that little crash course on the fundamentals that underpin the Singapore real estate market, let's take a look at my predictions for the private property market in 2025. And I'm going to start off first with the resale market, and especially the resale market volumes. Where do I predict volumes to go? I do expect volumes to come off a little bit compared to 2024, or basically remain the same, right? The reason why I predicted probably a drop is because the number of TOP units have come off as well, right, compared to 2024, right? Most of the people, they look to sell their units, right, upon TOP, right, then roll their investments into another property. The second thing is that there is a lack of exciting launches this year. I mean, excluding the fact that, you know, Ori, Elta early on in the year, the later part of this year, while there's still launches, and there are launches that actually I'm pretty excited about, they are not in the similar caliber to, let's say, Chuan Park, Emerald of Katong, Nava Grove of the later part of last year, okay? And why is this relevant, right? This is because there were quite a number of, even our clients or owners, right, that decided to let go of their TOP units from last year, right, or let go of some of their investments from last year to churn their investments into some of these more popular launches, your EOK, your Chuan Park and whatnot, right? And the lack of this blockbuster launches, so to speak, later part of this year will remove that kind of impetus for owners to sell, right? For most cases, even for our clients, right, if we always tell them to say, if there's nothing interesting or exciting to buy, then you don't sell, you keep on, right? So this is to prevent yourself from being priced out from the market. So now, the lack of blockbuster launches is probably also another reason why I do expect a drop in resale volume, right? So these are the kind of deltas or extra things that happen to the market that really moves the data points year on year, okay? Of course, the rain or shine, the needs-based moves will still be there, right? Which I think will still move this year, okay? So expect resale volumes to remain the same or come off a little bit, right? And with that, I do also expect asking prices to drop. Great news for buyers, okay? So now, as a seller and as a buyer, how do you kind of put all this into perspective? if you're a seller, okay, you have to be realistic with all the uncertainties around us and whatnot. If you have a need to move on, right, you need to be more realistic with your prices, drop it down a little bit in order to move on. If you're continuing to keep your prices as such, you may expect to take a longer time to sell, or you may expect to be stuck with your listings for quite a bit longer. That being said, right, if you have no need to sell and you can afford to wait, then you wait, right? You wait until the market kind of picks up closer to 2027, 2020, later part of 2026, 2027. That is where we do expect, with the MOP numbers coming in, that the market should pick up a lot more, especially in the resale market closer to that year, okay? Now, so that's if you're a seller. But if you're a seller who is also a buyer, this is where things get interesting, because it's a pretty good time to buy when the market is slow, right? Because I've always asked my associates as well as my clients, right? Who are those that make the most money, right? It's those people that buy when the market is slow. Not to say those that when buy the market is high, they don't make money, right? Especially the later part of last year is whether or not you even get the chance to buy, right? So that being said, right, it's a good time to buy. You're going to have a lot more options available to you, especially if you're looking in the resale market, right? More listings will come up, listings will appear like they are a lot more reasonable. So if you're selling and buying, this is where you probably got to line things up a little bit better. The worst mistake you can make is kind of like hope to hit a certain price, can't seem to hit it, and be stuck there and unable to move, right? The faster you can kind of reconcile this whole thing, it's probably a good time for you to do so, especially if you're upgrading. Okay, especially if you're upgrading. Okay, so that's how you can kind of piece these two things together if you're a seller and a buyer. Of course, the main reason why resale listings may take a longer time to sell is because the MOP numbers are really low this year, standing about 7,500 units. This is the lowest we're going to see in the last 10 years. But of course, it's not all doom and gloom, because those numbers are going to come up in the next 2 to 3 years. So if you're somebody who's upgrading, this is perhaps a great year to do so, where it's a buyer's market. All you need to do is be a little bit more realistic in your selling price, okay? But if you are downgrading, right, sizing, a retiree for example, if you can afford to wait another year or two, you may get a better price then. And so with all of that, we do expect the property price index growth to slow down. Last year stood at about 3.9%, already lower than 2022 and 2023. But this year, at best, I think it's going to be the same. If not, it will likely be lower. Next up, my predictions for the new developments. So I do expect volumes to be at best the same as 2024, if not slightly lower than 2024, primarily because we've already seen a lot of the pent-up demand being absorbed up with the blockbuster launches on the later part of last year. We have our Trump Park, EOK, Nava Grove, then we had Ori, Elta this year, Parktown this year, right? So a lot of the pent-up demand has already been absorbed up, right? Then again, right, even OMG and Bloomsbury still have a pretty decent 25% to 30% sold, and I do expect the launches coming up to hover about those percentages as well, okay? But that being said, do I expect a reduction in prices for all of these new developments? The answer is no. Okay, primarily also because there is no oversupply in the market, especially in your RCR and your OCR. So any potential reduction in the prices, I think the chances are very low. Okay, that being said, right, where are the opportunities? I do believe the opportunities will lie within the CCR, because there's going to be quite a fair number of launches coming up in those areas, namely the Havelock area. Okay, and so with the supply coming in, I do think the developers have to be sensitive with their pricing, right? So again, right, great time for buyers to start to explore some of these areas. I've also explained in my previous video about the concept of the tipping point, right? With a lot of these RCR, OCR, and the supply driving prices up, right? My two problem TCs, right? Because everybody is kind of thinking the same way, buying the same kind of products. We are seeing some of the PSFs in some of these branded developments, right? The Chinese Xiaohongshu call it the Wang Hong developments, right? Driving those prices so high, there are some undervalued opportunities, and especially if the developers are very sensitive with their pricing for some of these CCR developments, I do think they represent some good opportunity for buyers. And next, I want to talk a little bit about GLS. It's going to be my first time giving some predictions about GLSs, and I thought it's probably worth the while because whatever happens to GLS will then start to trickle back down to the consumers. And actually, as a consumer, right, you also want to see the take-up rate for GLS as a kind of indication of where the developers see the market, because you as a consumer, you're going to sell 1 unit, the developers have to sell 1,000 units, so they're actually a lot more sensitive to whatever is happening in the market. But that said, right, they have a slightly longer horizon, so actually there's also good benefits in seeing how developers analyze the market, right? And I do expect aggressive bids, right? More aggressive bids, right? For popular plots in the GLS list, okay? That said, do we expect the kind of numbers like what we saw in 2017, 2018 with 20 over developers bidding on a particular plot? I don't think so, right? We have seen in the Bayshore plot already, it's very, very popular. We are seeing, I believe, was 6 to 7 developers bidding, right? Again, right, this is because of a lack of supply in the RCI and the OCI, so I do think we're gonna see quite aggressive bids for some of those plots, right? Developers, quite a number of them, especially the old timers, have not really been buying a lot of land. I do expect to see them coming back in again, right? Because I feel all this uncertainty that we are seeing in the market, yes, realistically, potentially recession and those side of things, but I do think the developers do have confidence in the long-term runway of the Singapore real estate market. And lastly, for the landed market, so I do think the landed market will perform or trend in the same way as it's been trending in 2024, probably more sideways more than anything else, okay? So if you look at the data for 2024 for landed, right, it kind of picked up and then it tapered off, dropped slightly in the later part of 2024. So if you really understand how landed prices move, they move lagged to private property prices, primarily because the main demand for landed comes from private property upgraded. So when private property prices start to hold stable, then landed will actually also start to hold stable. But when private property prices start to spike and it reach a certain point where the gap between condos and landed narrow, and that's where we start to see landed start to move again. So why do I see that happening in the next 1 year or so? I don't believe that, okay, because we have yet to see again a large spike in private prices, okay. And when do I expect to see that happening? Probably closer to the later part of 2026, 2027, and then once we see that happening, the gap narrowing, then we'll start to see landed start to run again. That being said, right, it's still extremely hard to find good deals in the landed market, especially if you have a budget of less than $4 million, okay. 4 to 5 million I think is still okay, right? 5 million and above, of course, then you have options available, especially if you don't really mind corner terrace, that kind of thing, right? But semi-Ds, especially if you go district 15, less than 6 million, I think it's very, very hard to find already, okay? So if you are looking to upgrade to a landed, first of all, you could check out some of our videos about landed properties. We've bought one ourselves. If you need help with that, feel free to reach out to us. You need some clarity on that, feel free to reach out to us. The worst thing you can do if you're looking to upgrade to a landed is to base your decisions on all these landed price indexes, because they do not accurately reflect what's happening to the market, as because each landed market in its small enclave, in its small district, performs very, very differently from other markets. So you really do need to see what's available inside to kind of make the decision, okay? Again, if you're looking to upgrade, this is still the best time because it's primarily moving towards a buyer's market, of course, depending on what kind of assets you hold. So take advantage of this time where landed prices are kind of moving sideways. They're not spiking like what they were doing in 2021, 2022. You have time to kind of pick up your options, right? But if you have the intention and your budget is hovering around the 4 mil mark, you probably will want to act quickly. And for rentals, my prediction is that it's going to be stable, if not moving slightly downwards. So if you are a landlord and you have the opportunity to renew the contract at the rent that you previously have, I do recommend just taking that, okay? If not, your unit may go empty for quite a bit of time, yeah? We've come off the peak from post-COVID and we are seeing things stabilize, if not for certain areas, move downwards. So for landlords, my advice is to be realistic, renew as much as you can. You may potentially have to adjust your rental expectation downwards. So we've come to the end of my predictions for 2025. In summary, if you're looking to upgrade, it's a good time. If you're looking to to sell, probably not the best time. So it's important to be realistic, to kind of take a look at your overall portfolio. Again, if you need help with that, timing, calculating and whatnot, feel free to reach out to us. If there's anything you've seen in this video that you'd like to reference to, similarly, reach out to us. Happy to share it with you. Okay, so don't forget to like and subscribe if you want to find out whether I was right or wrong for my predictions 1 year from now. Alright, as a follow-up to this video, I'll be sharing some of my top picks for 2025, my top 3 launches for 2025, as well as some of the opportunities available in the market that might present itself in 2025. If not, thank you very much. I'll see you soon. Bye-bye.